Welcome back to our first time home buyer video series. In this final installment, we are going to cover how to look for your home, what it takes to get approved for a mortgage, and finally, when and where to apply for your mortgage. No matter where you're looking to buy a home, it's important to look into what other homes in that area sold for recently. This can be very helpful during the negotiation process. You can start by visiting open houses and use property listing sites such as Realtor.com to find out about neighborhoods. Speaking with neighbors can give you a better sense of a property or area. Chat with your potential neighbors and get their perspective on an area. The neighbors may know about problems or other major issues with the home. They'll also know about barking dogs, petty crime, and the size of utility bills. Ask questions because it's better to know beforehand. Think about demographics too. If you're buying in a neighborhood that is full of renters, it could drive property values down. If the neighborhood is full of single people, will you be happy there if you have kids in your household? Look around. If you think you found the neighborhood you want to buy in, take it a step further. Drive from your potential new home to your office to see what the commute is like, as well as places you'd go on a regular basis, like the grocery store, gym, and gas station. Visit at different times and different days to evaluate things like traffic and noise. Most neighborhoods are quiet in the middle of the day. You need to see what the area is like on Saturday night. Are there kids driving around blasting music? What's the traffic like in morning rush hour or in the evening? Learn about the schools. You can ask friends with children or do research online. Many people choose their homes based on the quality and reputation of the local school system. That will have an impact on your home's future value. Once you've found a home, it's time to get approved for a mortgage. Before completing a mortgage application, you'll need to know a few things: your monthly income, total monthly debt payments including auto loans, student loans, and credit card minimum payments, your credit score and any credit issues in the past few years, how much cash you can put down, how much house you can afford. Use our simple calculator to estimate this. The first step in preparing to apply for a mortgage is to document your monthly income and expenses. Before ever speaking to a mortgage officer, you'll want to determine how much house you can afford and how much you are comfortable paying. A good rule is that your total housing payment, including fees, taxes, and insurance, should be no more than 30% of your gross income. For example, if together you and a co-buyer earn $80,000 a year, your combined maximum housing payment would be $2,000 a month. In some cases, taxes, insurances, and fees may be equal to or greater than your actual mortgage payment. So you'll have to work backwards based on houses you like to determine what your payment will be and whether it fits your budget. Give your credit health a checkup before applying for a mortgage. Obtain both your credit score and your credit history report. You'll want to verify there are no errors on the report or recent derogatory items like late payments. The lower your credit score, the higher the mortgage rate you'll pay, which can add up to tens of thousands of dollars in extra interest. Finally, do not apply for new credit in the few months leading up to your mortgage application. Lenders get suspicious if it looks like you're piling on the new credit. Large debt payments like an auto loan or big student loans will limit the size of the mortgage approval you can get. If possible, pay these loans off or at the very least avoid taking on new loan payments prior to applying for a first mortgage. Also consider putting a 20% down payment to avoid having to pay private mortgage insurance on your loan. Commit to the maximum you want to spend before beginning the mortgage approval process. Real estate agents, your own desires, and some unscrupulous mortgage lenders may try to tempt you into buying a more expensive home than you can afford, perhaps rationalizing the decision by reminding you that real estate is bound to appreciate. That may happen, but it's best to have a smaller payment you can afford in good times and bad over a bigger one that you could lose in foreclosure if anything goes wrong. The only wrong way to get a mortgage is to walk into your local bank, ask for a loan officer, and accept whatever rate they give you without ever shopping around. You can compare rates with any number of leading online mortgage lenders or find a local mortgage broker who will shop your application to multiple lenders on your behalf. You can meet with a mortgage lender and get pre-qualified at any time. A pre-qualification simply means the lender determines that based on your credit score, income, and other factors, you should be able to get approved for a mortgage. It's informal and totally non-binding. As you get closer to buying a home, you'll want to seek pre-approval. You can meet with a local credit union, mortgage broker, or even get pre-approved online from any number of online mortgage lenders. Wherever you go, this pre-approval isn't binding, but it is a strong indicator of your ability to get approved for a mortgage that you can provide to sellers with your offer. Most sellers will want to see a pre-approval within a couple days of receiving your offer, if not provided with the offer itself. Buying a home, especially for the first time, is both scary and exciting. Spend a little time researching and planning. Put together an A-list team of helpers and a mental list of things to look for, and the scariness quotient goes way down. You can feel confident you're making good choices, and your path to that dream house will be both shorter and a lot easier. Be prepared and have fun.